Hi, today is Monday the 28th, and this is the weekly recap on the current trades. We only have July and August on, and July, as you can see, is not performing fantastically, but it is safe enough. The market has been very, very bullish, and if we had now to close the CCS, it's about 10 cents, so not a big deal. We see, however, that the PNL has not moved up with, of course, the delta is flattish, but it shows that with the little negative vega that we've got, we should have had a little bit of a lift, and that's generally typical when the market is close to its end. I mean, it's more sensitive to fluctuations, but we see that the market is not really moving towards the expiration line as we would expect. But of course, it's still 18 days. These are not the final days of this trade, although we could definitely close it now. So what I would do now, I would probably close this one because the mark price is probably, the liquidity, as you can see, is drying up. We don't have that much left. So I would look probably for juicing the CCS either on 45.75 or 4600 or 45.50, 45.75. I will see whether liquidity allows. Believe this one will have a mark price below 5 cents. This one may be a little bit higher than 5 cents. So we will see how it goes. I will probably also reduce with the same type of broken butterflies, short and reducing, and that may actually pay for the 5 cents. If I look at the price, I'll probably get 5 cents. Well, oh no, it comes as a debit now. It's getting a little bit late, so I would rather leave it there. I mean, as you can see also that I've reduced my capital usage under 10k, and generally under 10k, if the trade is safe enough, I don't really bother. So I could leave the trade unchanged, maybe reduce the upside a little bit. I can probably get 5 cents here. I just have to check for the mark price, because when liquidity is low, although the mark price is not a very valid indicator, that's still an indication that market makers follow. So we'll see. Maybe I will do nothing, because if we look at the vol skew, we see that for July the trough is now on 43.80, so it's moving towards the money, and with 45.50, as you can see, the liquidity is little, but the trade is pretty safe as it is. So no sweat, no real concern for July. And as you know, trading a larger account, it's better not to overtrade, so a limited number of trades. With the overall capital usage under 70%, I could even enter September this week if necessary without changing anything. So that's it. Not much to say about July. August is not doing fantastic. I've been a little bit too slow looking for opportunities that never materialized to build up the trade, but now it's about time to do this. I may go for a PCS, probably around 3900. Will give me not that much, I mean $1.5. I would probably go up to 20k here, so I can probably get two of those like this, because adding a broken butterfly, I mean, that's not what's going to raise my upper expression line. The return to the sweet spot, I mean, the sweet spot has been pretty good. I mean, really, although the delta is still flattish to slightly negative, the trade hasn't lost. So the vol reduction has actually lifted my profit line satisfactorily in this rising market. I haven't seen any reduction in the current profit line. So probably this, I'd put CCS a little bit too early. There are 65 cents. I got 55 cents for them. So it's not a big deal, because again, going back to the IV skew, the skew is, I mean, you can see that the trough now is around 4,500. So we're still safe here as well. As you know, I'd rather trade conservatively. My only frustration here is that even though the trade has behaved okay, I've been really looking for building a sweet spot in case the market retraces deeply during the month of July, but that's a bet. In July I had the same bet, it never materialized. I was also kind of slow in building up a good profit line, but it's okay. We will get to the 2% at Reg T leverage 1 and a little bit above. Now I'm actually pushing the leverage on the fund account to 1.5, so I can deal with a lower profit line. Profit is still pretty good at the end of the day. So on this one, yeah, 53, we know that when volatility is low, the trade buildup is also slower. So the end of the buildup period, generally 56 DT, sometimes 49 DT, may be 42 DT. It's okay. I mean, as you have seen in lower volatility, I've kept my trade trades up to expiration or expiration week, so I'm not too concerned. I just have to improve, maybe get a little bit of a background, return to the sweet spot type of scenario, but I need to really focus on the trade performing at least a little bit. I would say $500 to $700 just in case it does not materialize on the month and during the month of July either. The correction is definitely long overdue, but it's very difficult to time, and if you have watched the SPX Outlook video, I don't see it coming anytime soon. We have the end second quarter window dressing, not so much on derivatives but on cash equities, spot equities. There are, especially that we had the Russell rebalancing last Friday, there will be some window dressing. In other words, there will be the large funds maybe changing some allocations here or there on the 30th. So that's this week. I don't see that enough to really warrant a correction, but the bull market has been fueled by the retail, but financial institutions have really done nothing. They've benefited selling to the retail, and now I think if they come big and now start selling, it could have an impact. But again, I don't have a crystal ball, so I will keep that at least a little bit of a backdrop of a return to a sweet spot. We will see, but at the same time, I can't just go for $82. I need to get to at least $400-500, and I give myself maybe another 2 weeks. Again, low volatility, lower buildup. Okay, that's it for now. I will maybe look at September entries, although it's not very enticing with this volatility. Volatility is low, but above 15. So some people exaggerate in the market commentaries that it's a vol implosion and so on and so forth. That is not. I mean, yes, relatively so, yes. But we still have a VIX above 15, so above its long-term average. So we still have good volatility. We just have to be a little bit careful because, of course, vol can jump back to 22, 25 or above. Okay, as always, follow me on Slack and there will be more regular updates. Thank you for watching, and bye for now.